Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Ryan Littlestone, who is an independent market trader. How are you today, Ryan?
I'm very well. Yourself?
Very, very well. It's been an interesting week, a shortened week. Obviously, the North Korea moves over the weekend, same as we saw a few weeks ago, and I think there's probably more of that to come. But yeah, it's been an interesting week. Risk off yesterday, risk on today tentatively. And we're looking at, I think, non-farm payrolls, Labour Day, etc., all to come in the coming weeks. But you've kindly brought along a few slides today, and starting off a fairly active pair, but still within the ranges. Dollar yen. Just talk us through your chart here.
Yeah, we've had a little bit of a switch around, on yesterday again, like you say, over the North Korea risk event. It started off being, is this something a bit more serious now? Heard that maybe it was 3 missiles at the start, and then it wasn't. It was 3 pieces, and that all sort of got dumbed down over the weekend and over yesterday. And we've seen a reversal in risk, as you say, but we're still very much in a range. We're in a downtrend in dollar yen, and at the moment there's not much that shifts that. It's mainly only the yen side that's playing ball to that. So while we've seen a spike today, it's not breaking out anywhere. We're touched into 110. I think up towards 110.80, 111. That's going to be a reasonable place if you're looking at getting into new shorts, fresh shorts. But until we see a decent break higher, well above 111, maybe 112, then the bearish pressure is still in there. But we've got some strong levels down at the low 108s, and they're worth bearing in mind. That's a level that I'd look to take a long at, depending on the news that gets us there. But we're still sitting in the range. The wider range is up towards the 114, 50, 60 level, and down towards the low 108. So while we're in the middle of that, we're seeing a nice consolidation phase, and you can trade the levels in those.
I mean, with regards to obviously looking at those ranges, and bear in mind the North Korea threat. I mean, the North Korea threat, if that rhetoric ramps up or they launch another missile, you're more likely to see a move for the yen, but bullish for the yen, as you're less likely to see a negative on the dollar. I mean, it's, as you rightly say, we've got this downtrend, but there is that risk if you're short dollar yen, suddenly there could be a spike upwards, whereas maybe kind of the ongoing trend or the small trend is still downwards. So, I mean, would you be looking at kind of stops or guarantee stops, or how do you protect yourself for that event risk that can, as we saw over the weekend, just come out of the blue?
Yeah, I mean, it's a strange one. I'm never too sure how to play it, because if North Korea start lobbing things at Japan, that changes the risk picture. Are you going to see a run into yen if that's the country that's in the target line, or are you going to likely see runs into euro, which you look at euro yen, which has been more active than probably the most active pair among the yen pairs. So it's always a question of where is the risk going to hit. But yeah, when you're trading things like this, again, it's always wise. I mean, you've got a weekend risk. When the market's closed Friday, then you're in no man's land.
And we've got Labour Day coming up.
Labour Day coming up as well. So anytime you've got a break, just like we had a long weekend in London, a break, you've got to think about your trades if you hold them over the weekend. If you've got a broker that offers guaranteed stops, then pay the extra, take the guaranteed stop, and be safe that if you do wake up on a Monday or Tuesday and something's happened over the weekend that's gone against you, you're protected. Otherwise, look at these big wider levels. As I say, that 108, low 108 level, it's going to be a big level. So even with, unless there's a direct strike on somewhere, him playing his games over in North Korea, then the bigger levels should hold. So they're the ones that you want to look at and place your stops accordingly just below those. And it gives you a bit of leeway, a bit of movement there if you do get these moves. But as far as the risk trade goes, it's a difficult one to play. So I'm less keen to hold trades over the weekend.
Understood. Good advice. Moving on, euro dollar. This on the monthly chart now. A couple of months ago, we had a visit over to Strasbourg, which you kindly joined us on, so we got to meet a lot of European leaders, and you kindly did an interview with us with regards to the euro and what you thought about it. And you were very adamant that the trend was there and it would continue. Now, fast forward 2 months. Well done, gold star. Here we are. Onwards and upwards, but there's got to be a point potentially when this runs out of steam. So, well, talk us through your chart. Are you still bullish on euro dollar?
Yeah, I'm still very bullish. I'm still long. a decent amount. I was buying it late last year for this very move. But, you know, it's nothing until you start banking it. I took a little bit off yesterday when we were in 120 because came back from the long weekend, looked at the charts, thought, right, we've broken 120 here. This was going to be a particularly big level. Is it going to build? Is it going to fade? And, you know, just sort of with not really a clear head, just coming back from a weekend, I thought, right, take some more off the table. You know, I'm 1,700 pips up. Let's take a bit more, bank some money. There's nothing wrong with that. But, you know, you've always got to look, it's with me and trading, it's not, I could kick back and say, yeah, I'll wait for 125, 126, but that's not the way I trade. You know, every time it moves up, I want to know, is that it? Is that as high as it's going to go? What are the reasons to continue this trend? And at the moment, the fundamentals point to the fact that we've still got a bit more room to go. You know, the taper or whatever the ECB are going to do, that's not settled yet. So when you look at these big long-term trends, I like to look at it in phases. You have the expectation phase, you have the actual phase, what happens, then you have the what next phase.
Yes.
At the moment, we're still in the expectation phase, so I'm happy to play the trend. But I've got a mind and an eye on these bigger levels, like the 200 monthly MA up there. We've also got that 50 fib of the big 2014 move. So there's some big levels up there that we're going to need to watch, and they could be levels that, for a short period of time, halt the flow, halt the trend, and we could see a decent dip from there. But those are the levels that I look at, and I think, right, if we hit those levels, do I take a bit more off? Let's see what the lay of the land is.
And that's quite interesting. You're an experienced trader, and psychologically, just fading that trade, just coming out, locking in that profit.
Yeah.
And also, you know, psychologically, for a lot of traders, will look at the absolute lows, look at the tops, and feel regret that they didn't carry that whole trade up to the top. And
Yeah.
we can all be generals after the war. It's very hard, you know, in hindsight, in foresight to call those tops. So that's the thing to do. If you feel comfortable with the profit you've locked in, and that probably goes back to when you entered the trade, you had an expectation of what you were going to get out of that trade. And if that starts to be fulfilled, then I assume you're looking just to fade out and lock in some profit.
That's right. I mean, you know, when you get into a trade like this, you know, I looked at those low levels down there at the 103s, 104s. You know, those were my entry points. I started building from 106.50 odd. All the way down to 103.50. And just as you look at those levels to scale into trades, you've got to look at those levels, the same levels when they come up. It's no good getting into a trade and thinking, right, I'm using a tick to get in, but I'm going to gnaw it all the way up. It's going to 130. That's my profit target.
Fingers crossed and hope. You know.
I never had a profit target. I never had a number that was my profit target. I had my strategy, I had my entry, and then I watched the levels as it went up. You know, we had a big level at 118, 118.50. That was one of my, what I call assessment points. So if we get there, I look at it and think, right, this is a big resistance level. What do I do with my trade? If I want it to go high, it's got to break this level. If it doesn't, what do I do? Do I take some money off the table, wait for a dip, reload? And that's pretty much the way I did. I missed it the first time. I think I missed it the second time, but on the third time, I took some profit. Then you wait for the dips, you reload up. Then it breaks through, you're happy, you're smiling, and then you just move everything up again. What's the next resistance level? What does the price need to break now to continue this trend? And if you see the signals that it's fading, those are the times when you have to make a decision, take some off the table, get out altogether. But at the moment, the fundamental picture is still strong. Europe is still slowly recovering. We still don't know what the ECB are doing. They're going to stop QE at some point, whether it's now, whether it's a year down the line, whether they taper 20 billion now, or whatever they do, they've got to do something. The end of QE is coming.
Yes.
And it's just sitting with the market and those expectations, and when the expectations are at their highest, when the market's screaming, oh, they're going to do this and whatever, that's the time when I start to think, okay, now we're perhaps going to see the end of this trend, because we're coming through the expectation phase, we get the reality of what's going to happen, we know they're going to taper, they're going to do this, they're going to do that. Then you move into the what next phase, and that's where you tend to see it consolidate. And then
sometimes better to travel than arrive.
Yeah, and you've got, you know, if you want an example, look at dollar yen. You know, we had it all through the last few years. We had the expectation of the end of QE, the taper, the first hike, the second hike, you know, up at 125s, 120s, and now we're here at 108 because you run with the expectation, and then when you get the final act, when you find out what they're going to do, that's usually a sign of a top. So that's when you look to change out the trend.
Understood. And just briefly, if we can just touch on some key levels, if you can just pick out some key levels here, just to round off.
Yeah, certainly. You know, as I point out in dollar yen, you know, the longs, I'll be looking at the 108 lows down to there 107.80. On the higher side at the moment, I'll be interested in shorting towards 111. Euro dollar, again, the same thing. We had a pretty strong few bottoms down at that 117 level, just under 117. And again, we got some big levels up towards 121.65 and 121. So those are the sort of areas that I'll be looking to enter trades at, long and short.
Fantastic. Well, thanks very much for sharing your knowledge. I think in 10 minutes you've given our viewers what they probably pick up in 20 years of market knowledge or reading about 50 textbooks. So appreciate you coming in today. Ryan Littlestone, independent trader. Thank you very much.
Thanks.